The last 12 months, it's been incredibly impressive just how resilient the economy and financial markets have been in the face of stress in the banking system, in the face of the Federal Reserve going from 0 to 5.5% in just 2 years. How impressed should we all be?
I think we should be very impressed. It obviously wasn't a perfect year, but if you think about the stresses in the system, the kind of inflation that we saw, the kind of policy response that had a very rapid run-up in interest rates, and the stresses that imposes on a system. We saw some of that in March with the regional bank failures in the U.S., the failure of Credit Suisse. I think the policy response and the joint response between the actual regulators and the private sector, particularly the large U.S. banks, was actually quite admirable. I think as you're seeing now in terms of what's happening with inflation, I don't think it's over, but it certainly seems to, in most parts of the world, have peaked. Now, the challenge is it's not over, and when you have this kind of long, lower for longer period of interest rates, and you have this kind of rapid rise, and the realities are that interest rates will remain much higher than they have been over the past 10 years, there will be stresses imposed on the system.
Do you think we are in a better place, given what we found out in the last 12 months? And you mentioned the policy response. I think we have to mention oversight as well. There were some failures there. Ron, are we in a better place now? Have we learned the lessons from last year?
And I think we are, and I think there were failures. I mean, let's be real. The first failures were of management. These were poorly managed institutions, and perhaps they weren't as well supervised as they should have been, or the supervisory response could have been faster, but it really was a failure of management first and foremost. In terms of are we in a better place, I think the answer is yes, but I think we have to be wary because with this kind of interest rate and the interest rate costs that have gone up everywhere, there probably will be more stresses that will manifest themselves.
Let's talk about management of the Federal Reserve. You mentioned interest rates and inflation. I think we should probably build on that as well. In the market right now, we're pricing quite a few rate cuts for 2024. The Federal Reserve, it's implied by the median dot in the summary of economic projections, is looking for maybe 2, maybe 3, based on a range of Federal Reserve officials. How do we reconcile that gap? We've heard from a range of guests already this week. The likes of Howard Lutnick said it's laughable. We heard from Ken Rogoff of Harvard, who said it's a pipe dream to get a soft landing and the rate cuts that are priced in this market for 2024. How do you think about that?
So let me start with what I believe. I mean, I'm not with the Federal Reserve, so
Sure.
This is what I believe. I think that the Federal Reserve, if anything, is going to err on the side of holding interest rates. If you look at labor markets, if you look at the underlying economy itself, it's quite strong. And I think that the danger of undershooting is far greater than the danger of overshooting. In other words, I don't think the Fed would like to see a resurgence of inflation. So to me, I think the Fed was very clear in their dot plot, and I don't know why the markets decided to double it and then go to town on that. It doesn't make sense.
I think we're still trying to work out whether we have truly broken out into a new economic regime post-pandemic, or whether we're going back to what we saw before: low and stable inflation, low growth, low interest rates. As a CEO of an institution, a financial institution, State Street, how are you positioning your institution for this new world? Is it truly a new world?
Yeah, so our institution is very much tied to how investment markets do. And investment markets and financial markets tend to go together. And typically the rule of thumb is that financial markets will grow at a multiple of the underlying economic market. So it starts with growth, and we have been in a very low growth situation except for the last couple of years, which really was a recovery. And I think the big question for the global economy is, where will growth come from? If you think about where much of it has come from over the last 30 years, it's been from China. And while China will still grow, it's not going to be the same kind of contributor to growth. So I think the really big deal for all of us is, how do we encourage growth? And there's many things that are going on now that are really anti-growth.
Can you name some?
Well, I mean, it's the deglobalization that's going on, and some of it, it's understandable, right? If you think about supply chains and the desire to, either for supply chain reasons or security reasons, to reshore activities. I mean, that's not pro-growth, that's anti-growth. We're not optimizing the system, and maybe we should never have optimized the system. You've got, if you think about demography in the developed world, you've got you've got the population that's going to move from working and accumulating and investing to de-saving and spending all that money. So we have to really be thinking about how we're going to spur growth.
We've got about a minute left. I think we've got to talk about the US elections this year. The direction of travel with things like globalization, deglobalization, is that the direction of travel regardless of who wins the election and gets the White House this year?
I think the direction of travel worldwide is deglobalization. I think that the challenge with the U.S. election and with U.S. policy in general is the world is very dependent on the U.S. For lots of things. And I think what the U.S. needs to do is show consistency. It needs to show consistency towards its allies. If it makes a commitment, it needs to keep the commitment. And there's a lot of places in the world that's relying on the U.S. Maybe that reliance ought to be worked off, but right now that reliance is there. And if you think about whether it's NATO or whether it's going on in the Middle East, so I think it's very important the U.S. remain consistent.